Hello and welcome to today's conversation as we tackle climate change and its impact on investments. My name is Candy Guvi and my guest is Cornette van Zyl, who is investment analyst and associate portfolio manager here at Absa Asset Management. Cornette, how real and how urgent are climate change concerns globally and here at home at the moment?
It's very urgent. Scientists estimate that we need to limit global warming to only 1.5 degrees to avoid the severe impact of climate change. That is what the 2015 Paris Agreement aims to do. At the current rate of global emissions, temperatures are, however, likely to rise at 3 degrees or more over the coming decades. At those temperatures, the world could lose a third of its current food production. We are also likely to see extreme weather, rising water levels, and flooding of major cities. We will likely experience more intense storms and droughts and severe heat waves. This will be in my lifetime. It's not some future concern. The globe needs to cut carbon emissions immediately and in a meaningful way. To bring this home to South Africa, we are particularly vulnerable. Some scientists estimate that given our location and current environmental policies, that sub-Saharan Africa can experience warming of 2 to 3 times that of the rest of the world. We could be living in a desert in 20 years' time, facing severe food shortages. So it's urgent and it is real.
Is climate risk difficult to estimate, and how does the investment industry measure climate change?
Yes, it is very difficult to quantify. Different countries and different companies are impacted in different ways, and the expected impact is currently based on scientific expectations. The actual future reality can be a lot worse or even more mild. It is very difficult to accurately forecast how our lives might change in the next 30 years and what human behavior will be like. Consider how much humans' daily lives, our ways of doing business, our ways of communicating, etc., has changed in just over the last 30 years. But this doesn't make the threat of climate change any less real. For the investment industry, it's about understanding that the risk is real and that it is meaningful. We need to engage with our investee companies to see what they are doing to cut emissions, but also view the issue holistically, understanding the impact on jobs, on costs, on our company's revenue streams, etc. These then have to be incorporated in building the investment case for each of the counters that we hold.
What is the impact of climate change on investment returns and investment decisions?
To elaborate on what I said previously, investment professionals need to understand how climate change will impact each of their investee companies. Let's think about some practical examples. Increased hailstorms and bushfires could impact a short-term insurance company like Santam negatively due to increased claims. How does this impact its future profitability? Sasol in South Africa is a large emitter of carbon gas. If the government imposes greater taxes on Sasol, or it is pressured into spending more capital investment towards cleaner and greener processing plants, what is the impact on its future cash flows? Secondly, when looking at investment returns, given the urgency and how strongly society is starting to feel about climate change, we have seen a derating by the market of companies that are large carbon emitters. This means that although these companies might be trading on low valuation multiples right now, they might never regain their former valuations or derate even further. This would impact portfolio returns if these positions are not monitored and the risks are not brought into the investment case for these companies.
Which sectors will climate risks affect and which assets will they leave stranded?
I've mentioned some examples earlier. Another is the platinum sector. If the world moves to cleaner, greener battery-operated cars, as is already the case in some European countries, the demand for platinum will decrease significantly. The largest industrial use of platinum is in catalytic converters for diesel vehicles, which is a large source of the globe's carbon emissions. You can imagine the derating this would cause in the valuation of the platinum producers. To take it to a secondary industry outside of resources, investors are placing more and more pressure on financial institutions and insurance companies not to fund or insure new carbon-intensive projects. One needs to consider the impact on these companies' revenue and profitability if this was to materialize, and further on their valuations. These are just two examples. Like I said, investment professionals will have to work through the investment case of each of their holdings in their portfolios to understand the impact of climate change.
So where to from here for investors from a climate change perspective?
I think it is clear that climate change is a serious threat with real consequences. It is not some future concern our kids will have to deal with. It impacts companies' profitability, their cash flows, and their valuations today. So I would urge investors to discuss the impact of climate change on their portfolios with portfolio managers. Understand whether it has been considered and what their expectations are. Ultimately, understand how it will impact your investment returns.
Well, that's it for today. From me, Candy Guvi. Until next time, take care and stay safe.